Hello, hello, hello. Welcome, everybody. Thank you for joining in and taking time take a look at my video. So right now, what I'm charting right now is a Pacific Gas and Electric Company. Ticker symbol is PCG. I'm currently on the daily time frame. Some things that I'm keeping in mind and looking at this as well. So right now I'm on the monthly. Right now it's currently in. So tulip candle, stage 2 of the money flow, prices above the 20-day moving average. We have higher low, higher high, higher low, higher high, higher low, higher low, no lower high right here. Then higher high. So this is on a monthly. There's room for this to stretch out to about 20 to 21 on PCG on the monthly right now. And then as you can see, there's opportunity to the upside to PCG on the monthly, right? There's opportunity there. Coming down on the weekly, as you can see, it's been going higher high, higher low, higher high, higher low, higher high, higher high. And this was a lower high, lower low, lower high, lower low. So lower low, then from there it broke support here. Boom. Then now we have higher high, higher low, higher high. So we have an uptrend that's continuing. A good opportunity would have been to enter around here. It's cool. So with this on the weekly, what I have right now, if price goes above the weekly entry, which would be 1821, we can look for the upside to continue running up. Of course, we may get some choppiness, but we can see this continue going up to the upside here. I have my stop loss set at 1798. A few price targets, 1842 for my first PT1. Second PT2 is 1876. Weekly PT3, 1912. Weekly PT4, 1944. And I'll be adding some more here all the way to about 21 on the weekly. Also, this gold line here is a 200-day moving average. So that's a higher bullish moving average, letting you know, again, it broke above it. Something to keep in mind also is in the stage 2, prices above the 200, the 20, which is the green, the blue is a 10, and the 5 is, the red is a 5-day moving average. There's bullish on the uptrend on that. But keep an eye on that. And then if we drop down to the daily time frame, same thing. First thing I look for is where the trend has been going. Higher, lower low, higher high, lower high, higher high. It broke there, right around it. A lower high, higher low. Then now you see the trend, lower high, because they didn't go above this previous high, so it won't be lower. So it's a lower, higher low, lower high. Then the trend turns over because it broke. We didn't break it, but the 10 boomed, and now higher high, higher low, because this low is higher than this. And then it went lower low here. It broke this high. on the weekly. So this would have been a great opportunity. And then this was February 11th, and then ran it up here. So here we may get some resistance. Again, the weekly entry and the daily entry is the same points, 1821. We may get some possible resistance. So if it breaks above this, then we have a few targets we could potentially hit on the uptrend as well. So I may look for the when it breaks this, but possibly for a slight pullback when it comes back to retest, and then try to enter there and run it back up. So what I mean by that is the marker. So if it breaks this and it remains for with another additional confirmed candle, it may possibly jump in. If not, I'll wait till breaks out, hit a point, and then possibly come down to retest like this fair value gap here, and then possibly look for, if it doesn't break, then possibly look for an entry when it hits support here, and then look for an entry on the next candle, potentially run it back up again. But that's what I'm looking for on the daily. On here, and then on the option contract, when I'm looking at, I see we have 220